Last week was a good week for the S&P 500. It was up over 3% for the week. What we saw was a good beginning to the week with the Iran-Israeli conflict at least reaching a ceasefire at this point. The market liked the news and the S&P 500 rallied for the week. The S&P 500 ended up on an all-time high on Friday, which is good news. If we take a look at the daily action here, on Monday we saw a positive day, Tuesday a positive day, Wednesday was a negative day. That was the only negative day last week. Thursday was positive, and here's Friday reaching an all-time high close. Friday was a big day for news to be released. On Friday, we did see the core PCE come out on an annual change. It came in at 2.7%, and if we take a look, the consensus was for 2.6%, the actual 2.7%, so it's a little bit higher than expected. In defense of Powell, I do want to say that the numbers that came out Friday show that inflation really isn't coming down fast enough to warrant at least a lot of cuts very quickly. You can see here on the personal consumption expenditure index and excluding food and energy, which is the core rate. We can see here what's happened is we saw that inflation did come down from COVID, and in the middle of 2024, it stabilized and it's really been fairly flat since then. It hasn't shown signs of decreasing down towards the federal inflation target, which is 2% right here. I actually think the inflation target should be lower, but this is what they use. They use the 2% level here. Now, from the way the Federal Reserve measures it, they go, well, we haven't seen that move substantially lower here, so therefore we can't be aggressive in cutting rates at this time. But there's been a lot of talk from a lot of economists saying that they should really be cutting rates faster. And Powell's also been criticized by Trump. On Friday, Trump also announced that he was cutting off trade talks with Canada immediately. There's a couple factors that he mentioned. The first one is that the U.S. farmers have a tariff of 400% on dairy products entering Canada. Now, I think the 400% is a little bit high. A lot of the dairy products are tariffed at 200 to 300%, but a really high number nevertheless. But I think Trump's real target here is the digital services tax. Now, the digital services tax was created last year and implemented in the summer of 2024, retroactive to 2022. I don't know how you can do that, but it was. And it's discriminatory, and it's really designed just for the large US tech companies. And it's a 3% tax on the revenue that's generated from Canada. And Canada was asked to withhold that tax at the G7 meeting in Kananaskis recently. They said no, that they were going to go ahead. The first payment comes due on June 30th, and that's Monday. And so this is why Trump took these actions last week. The digital sales tax really didn't make any sense. Here we saw the Canadian Chamber of Commerce come out last year actually against the digital sales tax and say this is a bad idea. The Retail Council of Canada, the Canadian Bankers Association, the Business Council of Canada, the Canadian Tax Foundation, and it's bad for consumers. The price of extra subscriptions goes up, there's limiting content, so nobody liked this tax to begin with, and it was interesting to see Canada push ahead with that. Now, my take on the situation is I think what Canada's going to end up doing is just giving this up. It doesn't make any sense to fight for the digital services tax. I think they're just going to use this as a bargaining chip coming up. At least I hope that's what's playing out here, because nobody really likes this tax. Okay, let's get into looking at some market action last week. Here we can see the all-time high being reached. But this is some of the quickest recoveries of a decline of greater than 15% in black here. You can see how fast it went down and how fast we've come up. That's really been the story. This really has been a V-shaped recovery, a very quick recovery. Last week we saw the S&P 500 up 3.4%. NASDAQ was up 4.2. Emerging markets up 3.3, got a little bit of life there. And Europe has been lagging the US quite a bit recently, and the TSX was down, well, not down. It was 0.7% positive. It underperformed the S&P 500 substantially because we saw energy down last week, and also we saw on Friday, we saw the announcement coming out that Trump was going to cut off trade talks with Canada. If we take a look at some of the sectors here in the U.S., major sectors here, we can see it really was the growth sectors, consumer discretionary, communication services, and technology. These were the big performers last week. And energy was down, and that was largely due to the cessation of the hostilities between Iran and Israel this time. If we take a look at some of the sectors and performing here last week, we did see the gold was down 2.8% and gold miners was down 3%. I want to show this graph of gold here. We can see here that we've seen the tops here around 3,400, and we have seen this pattern of higher lows here along the way, which is a good positive sign. So it's a very bullish pattern, but we did see this breakdown take place for gold where it broke below that rising bottom trend line here. That's not so good. So we could see gold actually pull back here. It's totally possible. Wouldn't be the end of the world for gold if that did happen, and maybe we do come down to 3,000. Maybe we do see that move coming down here. It's totally possible. It wouldn't take away from the long-term bull case for gold. And there is another factor too. We are coming to the strong seasonal period for gold, so we could see gold actually perform quite well. If we take a look at the RSI here, we can see that we have seen the RSI here coming along and bouncing off 50. And so in a stronger uptrend pattern, that's often what you see. It'll move down to 50 or just below and then up higher. And so here we are, we're at that level now. It's going to be interesting to see if it weakens further from here. This will be the telltale sign or not. Okay, I want to take a look at a couple other sectors as well. Semiconductors did quite well again. I mean, NVIDIA's been doing quite well here. US banks, home builders, up 4%. I mean, we keep seeing reports coming out in the home building section about how bad the future is for home builders. We're seeing all those signs. The home builders are saying it themselves. And yet the sector just recently has shown a little bit of life here. I think it's more of a risk-on initial knee-jerk reaction to more favorable conditions. So it's going to be interesting. Perhaps the home building sector actually does okay here if we see the move over the next few weeks on a seasonal basis for the overall market tends to be positive. Maybe it does go up here a little bit, but it's got a lot of obstacles to overcome. Fundamentally, the sector is quite weak. Uranium last week. Look at this, uranium up 3.5% last week. I mean, this sector has been on fire. If we take a look here, we can see that uranium stocks have now traded green for 12 straight weeks, their longest winning streak in history. And look at this, break above this resistance line. Uranium just has been doing extremely well. For so long, I called it the sector that was not the Rodney Dangerfield of investing because it just wasn't getting the respect it deserves. Recently, we have seen that rise up, the sector do quite well. It doesn't mean it's going to continue. Long term, the bullish case is definitely there, but we could see some pullbacks along the way. Last week, we saw the Canadian dollar up, was positive, and we saw the US dollar actually head lower once again. We've seen the US dollar under pressure recently. This week is a very busy week for economic earnings. We do see on Tuesday the ISM manufacturing, JOLTS on Tuesday, ADP non-farm on Wednesday, jobless claims Thursday, non-farm payroll on Thursday. Usually that's the first Friday of the month, but Friday's a holiday. Unemployment rate Thursday, average hour earnings Thursday, ISM services on Thursday, and then we see the Independence holiday on Friday. So a lot of news coming out this week. A lot of investors will be taking a look at all of the employment reports to try and figure out what's happening here because a lot of the soft signals for employment are saying that it's really weakening, but the hard numbers such as the unemployment rate has actually been fairly decent. So there's still some investors trying to reconcile what's going on there. So that could be a market mover this week on a seasonal basis. We do see the market does tend to perform well at this time around the days of Independence Day and up until earnings season start in July. So the market does have a strong seasonal tailwind. There's a lot of unknowns here. Maybe the hostilities between Iran and Israel come back up again. As well, the 90-day extension that Trump had on tariff talks with most countries around the world comes up very soon. So we'll have to see that interplay between the U.S. and other countries and what could take place. We don't know what can happen there. But overall, we do see a positive bias for the market. at this time over the next week and possibly longer as well, perhaps up until mid-July. It's going to be an interesting time. Thank you very much for joining me today.